and welcome to Help Your NGO's exclusive webinar, Planet People Profit. We've all gathered here today to understand how each one of us can make a big difference by simply making the right choices. I'd like to take this opportunity to welcome our first speaker, the evangelist Dia Mirza. Dia is a renowned actor, producer, and activist. She's a committed voice for change and has contributed her efforts in the field of social change, conservation, and environment. She is the UN Secretary General's advocate for the Sustainable Development Goals and has been the face of many pivotal environmental campaigns across India. As a UN Environment Goodwill Ambassador and a Global Ambassador for the International Fund for Animal Welfare, Dia works to further spread the message on priority areas including clean air, clean seas, wildlife protection, and the climate change. She's also associated with the Wildlife Trust of India, Save the Children, and Sanctuary Nature Foundation. Dia, it's an absolute pleasure to have you on board. It is with great pleasure that I welcome our next speaker, the policymaker, Amarjeet Singh. Working with Sebi for the last 25 years, Amarjeet has extensive experience in regulation and supervision of the securities markets. He's the executive director in charge of corporate finance department and also heads the Department of Economic Policy and Analysis at Sebi. Amarjeet has been involved in various international regulatory initiatives. He represents Sebi as a part-time member on the board of National Financial Reporting Authority and of governance of the Indian Institute of Corporate Affairs. He has represented Sebi on numerous committees set up by RBI and the Government of India. Apart from an MBA, he holds a master's degree in economic policy management from Columbia University, New York. Welcome, Amarjeet. It's a privilege to have you with us today. Moving on to our third speaker, the practitioner, Chirag Mehta. With over 18 years of experience in managing alternative investment strategies, Chirag was ranked as the fourth best fund manager in the world under the age of 40 by CityWire in 2017. He's a qualified chartered alternative investment analyst and has also completed his master's in management studies and finance. Chirag currently manages 5 funds, largely in the field of alternative investments that includes Quantum's Gold Funds, a multi-asset fund of funds, an equity fund of fund, and the ESG fund. He joined the Quantum Group in 2006 after gaining hands-on experience in the physical commodities market and working on projects for the Federation of Indian Commodities Exchanges. Pleasure to have you with us today. And finally, I am Vinny Dholakia, the enabler representing Help Your NGO. I joined Help Your NGO in 2015 and am currently leading a team of passionate individuals committed to helping NGOs move a step closer to achieving the SDGs. Now, without further ado, let me ask the first question to the evangelist. So Dia, from an actor to an activist, how did you get involved in doing good? And how did that evolve into your active participation and association with the UN SDGs?
I want to start with thanking you for conducting this panel and for having this conversation. I think it's very important for more and more people to get engaged and understand what the SDGs are, and it's my privilege to be here. I have the extraordinary privilege of doing so much for our shared planet and the collective habitats around the world. And as an SDG advocate and UN Environment Goodwill Ambassador, these are not just titles, but our opportunities born from the passion and the love that I've had for nature and the environment and wildlife right from childhood. And perhaps it is my role in public life that brought me this opportunity. And it's a big privilege to be able to speak for and advocate for what is absolutely necessary for all of us to protect, as is becoming even more evident every day. It's not some idea that we need to protect. It is a very necessary and important connection and a relationship that we share with these entities and species and habitats. I think I've always been driven right from my childhood to act. I've always responded to the plight of those that cannot speak or express themselves, especially animals. I grew up in an environment where my mother would constantly be rescuing injured birds and animals and adopting them and helping them recover before she let them back into, nature. And I think it was these early impressions and these early learnings of empathy that made me the adult that I was. And it is the work that I did in the beginning of my adult life with organizations and NGOs that helped me understand that doing good is not something that you do outside of the main area of your work. It has to become a part of everything that you do, and it's not a separate entity. I don't believe in the concept of philanthropy as separate from your human entity. I think it's a very I don't know, I guess it's a very strange way of looking at being the best person that you can be. And I think as all of us have the potential and the ability as individuals, no matter what sphere or realm of life we are a part of, no matter what our professional roles are, whether we are journalists or entrepreneurs or directors of Sebi or whoever it is that we have the incredible ability to do good and make a difference, a positive impact on society. And I think that it was this that organizations that I work with over the years, approached by the United Nations, first the environment approach to be their ambassador 5 years ago, and it was a wonderful. I've learned a lot working with them, and subsequently working with the Secretary General on the Sustainable Development Goals, and being a part of 17 incredible leaders and advocates who are from different parts of the world. There's so much to learn from each of these advocates, but also so much to learn from the goals themselves and everything that we hope to achieve through achieving these goals. So it's been I think in many ways, I can't separate what the goals represent and what my life represents, because it's one and the same thing. And I hope that more and more people, as they come to understand what these goals are, will learn to see how the goals can become an indelible part of our everyday lives and the choices that we make as individuals every single day. For me, they are the North Star. They form a sense of direction and motivation and inspiration, and kind of determine my choices on a daily basis.
Absolutely. Dia, also, could you shed some light on what your role is as a UN Environment Goodwill Ambassador for India and as an SDG advocate?
Well, as the name suggests, the as an advocate for the Sustainable Development Goals, it's obviously to ensure that the maximum number of people, that I have reached to, that I can communicate with and kind of engage with, learn about the goals and understand the goals better. And that's the primary role that I play. And I use, of course, the power and the strength and the reach of my social media platforms to do that, outside of generating and creating content and creating opportunities of engagement and communication such as this and many others. I engage a lot with young people, students, and advocates that also kind of represent different fields. I work with NGOs, and it's really about building partnerships and helping how and determining how different people can start to learn to work with each other in with these partnerships. So I think in a way, as an advocate, what I really work or function as is like a bridge between the
Right.
policy and the science and the public, and make, I think, in a way, the sustainable development goals more like tangible, more reachable, kind of, in terms of just connecting and understanding what they are and simplifying them so that they're more approachable to more people, especially young people. And as the UN Environment Goodwill Ambassador, I've had the privilege of, like you mentioned in your introduction of me, working on some of the most powerful, some of the most urgent and important campaigns in raising awareness, not only in India but globally, an awareness that has then resulted in some very important shifts in policy, but most importantly has driven and has resulted in some absolutely incredible public engagement, unlike we've ever seen before, especially during the last 4.5, 5 years. We've seen more participation from young India in the history of this country, in the sphere of environment than ever before. So it's a real privilege interacting and engaging with young people, and but quite simply just taking the science and the policy and the understanding to people.
Thanks for sharing that, Dia. In fact, as you were mentioning earlier, partnerships is really important, and that's what SDG 17 is, right? Partnerships for the goals. So I'm glad you're really reaching out to nonprofits and partnering with them. Um, okay. Dia, next question is which of the 17 SDGs are you most passionate about and why?
Well, honestly, Vinny, I think the fact of the matter is that there is an interconnectedness in all of these goals. So it is
Absolutely.
impossible for us to achieve one goal if the others are not achieved, right? So they're all just like the human species and the natural world is interconnected with one another. So are these goals. But I think, given the urgency and the immediacy and the rate of change and devastation and all that climate change is causing, I think that there are three SDGs that directly impact all the rest. And we as a human species now will be completely dependent on ensuring we achieve these three goals in order to achieve any of the others. And that would be SDG 13. So if we don't achieve SDG 13, which is climate action, it would not be possible for us to achieve zero hunger or gender equality or education for all or nutrition for all, and or any of the others. So for me, it is 13: life below water, life on land. These are all SDGs connected to nature and bringing back and restoring the natural balance. I just want to quickly use this opportunity to highlight why, for those who may not understand or may
Of
not know.
course.
I think this ongoing health crisis caused by COVID 19 is a very urgent and a very important example of our failed relationship and the outcome of our failed and broken relationship with nature. Unfortunately, the human species has become the most populous species on the planet. We've also, unfortunately, altered 75% of the Earth's surface with the arrogance and the ego that we think we control everything. I think this invisible virus has taught us quite well that we are not actually in control of everything. And we are completely dependent on the balance of the natural world in order to maintain health and therefore then to kind of achieve any kind of progress, whether it is economic or any other. The third thing that this pandemic has taught us is that, and economists now are saying it, there are all kinds of reports, whether it's the IPC report or the the World Economic Forum reports that have been revealed that say that all human progress and all economic progress now is completely and solely dependent on the health of environment and ecologies. So that apart, I think what this crisis has taught us is that if we do not reinterpret the way we live, if we do not reimagine the world that we inhabit, which is completely in sync with the understanding that our health, our well-being, our survival is totally dependent on the balance of the natural world, we are not going to get very far, because climate change is causing unprecedented natural disasters and events that are causing huge devastation and destruction. We saw, you may have noticed that the temperature in a place called Lytton in Canada was 49.5 degrees
Yeah.
centigrade yesterday
Yeah.
and day before. And we are in, we're not even in the peak of summer yet. So um, it's a there are three crises that we were contending with before this pandemic struck, which was the climate crisis, the natural crisis, which was the loss of ecological systems and species extinction, and the third, of course, is the pollution crisis, the pollution of air, water, and seas. So if we do not reconsider the way we build our economies, the way we consume, the way we produce, the way we live, and understand fully that we are completely and solely dependent on uh, the choices we make now to determine our survival and our health, we're in big trouble.
Thanks, Dia. I was actually quite expecting you to mention that SDG as one of your favorites. And like you mentioned, all of the 17 SDGs are interlinked. And even if failure of one happens, then, it will hinder the progress of many others.
Yeah, we're completely set back on most of the SDGs. We had
Correct.
made some progress on a few because of the pandemic and because of many other natural and ecological crises that we are experiencing. I mean, it's not like while the pandemic is going on that we've not had floods or cyclones or drought. Everything else continues to happen, and that impacts people and causes huge setbacks.
True. My next question is to the policymaker. Amarjeet, from financial reporting to sustainability reporting, Sebi has now mandated the top 1,000 listed companies to disclose on their environmental, social, and governance, that is ESG framework, which I believe is a significant step towards the UN SDGs. Do you think investors are now considering ESG factors to be as important as the financial health of the company?
Yeah, absolutely. That is a short answer. But before I, delve deeper into it, thanks for having me in this event. Thanks to you. Thanks to Ajit. And also my compliments to Dia for, the wonderful role she's playing as a UN Environment Goodwill Ambassador for SDGs in India. So, to your question, definitely there is a growing awareness about ESG issues amongst all stakeholders, be it investors, the companies, or society in general. So investors are, increasingly recognizing that sustainability issues such as climate change can actually put the companies at risk, companies' performance at risk. So momentum has been building over the past few years. And my observation is that, in the last year and a half, since the pandemic started, the needle has moved even faster towards, the growing consciousness on the sustainability issues. So it's not just a plain statement. We also have the evidence that demonstrates that more and more sustainable investments are happening today. And let me just give you some data, in terms of evidence to just demonstrate that how investors are becoming more conscious about sustainability issues and how they are driving investments in the corporate world. So just to give you some figures here, the total assets in the sustainability funds increased from USD 550 billion at the beginning of 2018. This is the global data. To USD 960 billion at the end of 2019. So it was 550 billion in the beginning of 2018, and it became 960 at the end of 2019. Wow. So in the first 3 months of 2020, when the pandemic was unfolding, ESG funds witnessed inflow of USD $45 billion as compared to outflows. See, there was a crisis at that point of time. So there were global funds outflows of 385 billion in the overall fund universe. But the ESG funds were still attracting funds, fresh investments. And if you look at the subsequent quarters of 2020 in the area of sustainable investments, you find that the total assets in sustainable funds, they were at USD 1.6 trillion at the end of December 2020. So if you go back to the figure of 2018, there's a 200% increase in 3 years. So, so investors are speaking with their checkbook. It is not just just a statement being made, plain statement being made. And let me also add, when we're talking global, Europe accounts for 80% of these funds, asset under management. Let's look at the Indian situation. In India, I would say it's just the beginning of ESG investing that we started witnessing. We have 9 ESG themed funds today in India. And it's interesting to note, out of those 9 funds, 7 were launched after January 2020. So there's a sudden sort of, interest in ESG investments, and our, ESG funds assets in India, they doubled from previous quarter, in the last quarter of 2020, I'm saying, to USD 1.3 billion. So it is very small amount compared to the global fund. So that is why, this is just the beginning, as I said. So there are 2 driving forces when it comes to ESG investing. One is the investors. Second is the governments and the regulators like us. So we are trying to do our bit in this space. So in fact, my awareness about SDGs grew over the last 2 years since I've been engaged in this work. And we've actually mapped all the SDGs to our disclosure framework. So we've come out with a framework called BRSR, business, as you mentioned in your question itself. And that lays, considerable emphasis on quantifiable metrics, in terms of the impact a company is causing on the environment or on the gender diversity issues or a host of other issues. So our expectation is that this BRSR will bring in greater transparency in this space and will give a fillip to sustainable investments and also a sustainable economy. I'll pause there.
Yes, Amarjeet, I think ESG's popularity is also evident from the surge in the launch of ESG-themed mutual funds in India, which is a pattern picked up from the international markets.
Yeah, that's right. That's absolutely right.
But you say we have only 9. I hope we have many, many, many more ESGs in the near future.
Yeah, so but we have to be a little careful there. As a regulator, of course, we are responsible for disclosures in the market, and also there should not be any mis-selling. I mean, we would like to have more funds, but from the point of view of protecting the interests of investors, we would also like to make sure that a fund does not sell ESG just by labeling it. It should be true to its label. So those kind of concerns.
Absolutely.
Amarjeet, if companies refuse to pivot towards the SDGs, since it may result in, say, loss of profit, Will Sebi consider taking punitive action against them for not reporting their progress towards the SDGs?
So Vinny, that's a great question. So we have to understand this little carefully. So let me try and illustrate it with an example just to make it clear. So as I said, our disclosure framework is rooted in SDGs. We've mapped out all SDGs into our disclosure framework. So maybe let me pick one example, let's say SDG 5. And so corresponding to that SDG 5, we seek information from the companies on gender diversity in a company, representation of women on the board of directors, turnover of the women employees, the rates at which they return after maternity leave, the benefits which are provided to them, the median wage structure of male versus female employees, and so on. So there's a host of disclosures out there. So idea is to get a sense from the companies, from the organization, are they really promoting gender diversity and equal opportunity for women within the company? Now, supposing a company does not disclose this information, or as per the framework, or maybe gives a misleading disclosure in terms of these disclosure requirements, those companies, we will have a right to take action. But now the important point is, supposing they disclose, but they are not making progress on these in these areas, or supposing they are nowhere close to the targets they would have liked to set for themselves, we will not be able to take action for their non-performance. For non-performance, investors will take action. If as an investor you see that this company is not doing so well in gender diversity, you will decide not to invest in that company. We will monitor very carefully the disclosures, any non-disclosure and any misleading disclosure. That we will have the right to take action as a regulator.
Amarjeet, interestingly, the SDGs and the Indian CSR law were actually formulated and implemented around the same time. In fact, areas under the Schedule 7 of the Companies Act can actually be mapped to multiple SDGs simultaneously. And lately, the government has introduced penal provisions for non-compliance with CSR rules, which is actually a paradigm shift from the earlier comply or explain regime. So I feel Sebi also could, do something similar and eventually consider introducing penal provisions.
So just to clarify again, penal provisions are there. We have all the regulatory powers. See, we run a disclosure-based regime. So any problem with disclosures, we can make companies accountable and take action. But when it comes to the ESG space, see, this has been a light. Let's understand our evolution. We've had business responsibility reporting, which was mandated by Sebi way back in 2012. It started with 100 companies. Progressively, we expanded it to 1,000 companies. Now we've given it a total makeover and we are calling it a bigger BRSR.
Right.
So, but it's been a light touch regime. And if you look at the world over, very few jurisdictions have mandatory requirement. So we are one of the few jurisdictions where we've said you have to mandatorily disclose as per our framework. So that will kick in from the next year. This year it will be voluntary. Next year it becomes mandatory.
Correct. Got it. Moving on to the practitioner. Chirag, do you believe as a fund manager, prioritizing sustainability is far more important than focusing on returns? And how do you reckon your investors will react to this? Chirag, you're on mute, sorry.
Sure. Thank you, Winnie. Thank you for having me on the panel. I think congratulations to Dia for the great advocacy she's doing towards SDGs, and also Amarjeet, given the push that we all need as investors from a regulatory perspective. It's all coming from there. So I think great. Thank you for both of them. Coming to investors, yes, investors do look for returns overall. But if you look at the overall framework broadly, right? profitability and responsibility are complementary as opposed to being contradictory, right? And if you look at the relationship between the two, it's getting stronger by the day. I mean, if you look at, gone are the days when, corporations used to believe that pollution was just a free factor, labor was just a cost factor, and scale and scope was everything for them, right? The so-called social license to operate, which was taken for granted by many companies, is being challenged today. The social trends, the environment trends that we are seeing fast unfolding, and also there is at the same time rising public expectations for better accountability from these corporates. All this is having far-reaching financial consequences for the companies. And therefore, if you are not accountable, like for companies who are not accountable for their behavior, have risk associated with them, and may fail to generate the long-term return that investors are looking for, the compounding that we call, the compounding of returns that investors are looking for over the long run, will not be met because of these risks or will be endangered by these risks. So overall, it is in our self-interest, in the self-interest of our investors, that we replace the question in terms of asking how much return to how much sustainable return, right? It's a kind of misconception. People think that sustainable investing is about changing the world. It's not. It's about understanding how the world is changing around us. That is very, very important. And those changes are very, very rapid, like Dia touched upon the climate change. It's unfolding very, very rapidly. And if you look at certain sectors in the economy are already getting impacted by the climate challenge that we have, be it sectors like energy, agriculture, insurance, transport, logistics, all are already feeling the brunt of climate change that we are having at hands. Also, if you look at the macro level, India as a country has not created the climate problem, but it has to be at the center of any potential solution to mitigate the climate challenge at hand. Why is that so? Because if India is not part of a solution, then it will undo what other countries are bringing to the table. The hard work that they're doing towards mitigating issues surrounding climate change, that will all be get undone, because if India, as it progresses, will start consuming a lot more things, be it air conditioners, automobiles, etc., etc. And if we do not grow sustainably in all these are consumption habits, then I think it will lead to an impact in terms of the climate issue will just go out of hand, right? So this means that government will be at the under pressure from all these global counterparts in terms of how India behaves towards its consumption habits, and government will surely pass it on to companies, consumers, and if your companies you're investing in are not geared towards growing sustainably, then there will be some risk, some problems for those companies going ahead. So overall, we need to invest in companies which are good, sustainable companies. And if you look at traits of these companies which are good, sustainable, they have proactive stakeholder engagement. There is no evidence of harmful relationships. They are well aware of the social and environment trends that are unfolding, and they kind of imbibe them into a risk management incentive processes overall. So they are ahead of the curve, ahead of the disruptive changes we might see from a regulatory perspective, from a consumption perspective. They are innovative, they are efficient, they have a good board management, which is adaptable to all these changes. And therefore, it all speaks about the ESG standards, all speak about how good the quality of management of these companies are, right? So these strong ESG companies or sustainable companies are less exposed to tail risk overall. For example, could be environmental accidents or be punishment from regulators. So they are kind of incorporating all this into their business activities. And in a nutshell, if I have to define why it is important from an investment perspective, is if you think of investing is all about incorporating the future, right? So ESG risk and opportunities are an important component of that future valuation, and therefore cannot be ignored by us as investors. So overall, I think it has become very, very important to look at sustainability as a criteria into our investments, and I think that will reap rewards in the long run. And as Amarjeet said, I think it has been very well, though it is very, very nascent and it still started in India, it's been very, very received by the investors. If you look at the growth of ESG funds, although ESG funds have done well, but that's the only thing not driving investors. It is because ESG is giving them an opportunity to vote with their wallets, to vote where their belief and value systems are. And therefore, we are seeing that grow, and we will see that growth improve manifold going forward as well.
Thanks, Chirag. Dia, as the UN Environment Goodwill Ambassador, you led the Beat Plastic Pollution campaign in 2018, which eventually led to India proposing phase out of single-use plastics by 2022, which I think is phenomenal. What are the three things that you wish to achieve over the next, say, 1 or 2 years?
It'll be phenomenal if we achieve this goal. Because the fact of the matter is that even when our Prime Minister made that commitment to the world that India would phase out single-use plastics by 2022, 18 states in our country had banned single-use plastics, but the ban had not been implemented on the ground. Barring 2 states, none of the other states have been able to achieve this. And I think that draws our attention to the problem really that the world is suffering at large. And the only way that we can really bring change, and this forms a very big part of what I would hope to be able to achieve within my lifetime, is the understanding that we no longer as the human species have the privilege of being disconnected with our understanding of or that knowledge of our interdependence with nature and the interdependence of the health of the natural world with our health. When we talk about pollution, and single-use plastics is actually a very big contributor to pollution, whether it is air pollution, soil pollution, or water pollution. I just shared 3 disturbing facts. Recent scientific studies have revealed that there are plastic microns or plastic microbes that have been found in the placenta of the uterus. Now, if plastic has entered our bloodstream, the human bloodstream, it essentially tells us that plastic actually goes nowhere. And while it may be a life-saving material in many cases for many things, our medications are packaged in this material and, are, like I said, life-saving, it is the same tendency of the material, which is to outlive us all and outlive many generations, that should have made us accountable for the production and the scale of production and the management of this plastic. Where is all this waste going? How are we dealing with this waste is a question that world leaders, policymakers, consumers, and companies should have asked when we started using it at the extent and the accelerated quantum of plastic that was being used for packaging. So there are a couple of things that I feel that we need to definitely implement with urgency, not just as a country, not just India, but globally it needs to happen. One is the extended producer's responsibility. If you are a company that is packaging our food or beverage or any item of sustenance that I use in my everyday life, and you're using plastic to package it with, you have to be held accountable for where that packaging is going to go. Are you introducing it into a circular economy? What are you doing with that waste that is generated? The second is civic bodies need to become more strengthened, and waste management as a system, and it is a profit making department. It's something that can genuinely lead to a lot of income for many communities if it is streamlined and implemented effectively across the country. So waste management is a very critical area of our focus that we need to concentrate on. We So extended producers responsibility, proper waste management systems that hold citizens equally accountable as we do industry, and basically there is a partnership between the public and the obviously the government sector, where we make this system accessible and possible. There are incredible examples of individuals working in urban centers right now to make this a plausible dream, that to make this a reality. But we need a lot more momentum, because as somebody who's traveled from the source of the Ganga all the way to sea, slow travel through 5 states, and I've seen plastic pervade into the most natural, most pure places of our country where there is no human activity, plastic has reached. So it started off with me wondering, if there are no collection systems, there are no management systems here, where is all this plastic going to go? It's obviously going to land up in our rivers and our seas, and eventually in our food chain. But so that's a very important part. The third area that I really hope, uh, it's difficult to kind of say one thing, but in context to the question that you asked, the third aspect in seeing this as a reality would be to build or kind of really support green innovation. You know, I want to, as a woman, give an example. I know there are probably not enough women in this forum. I can't really tell how much female representation we have here, but a small item of personal hygiene that we use to protect our lives, actually, up until a few years ago, I didn't know it was made mostly of plastics and is incinerated, which again causes further pollution levels, is the sanitary napkin. Right now, I know for a fact that there is a sustainable, biodegradable, completely healthy option of that available in the market today. It's not been mainstreamed yet, but the question I want to ask is, how long before governments ask, you know, the big companies that manufacture these products, why they are not making the most sustainable choice? Why are they making people sick with their products? Why are they polluting our air and our water and our soil? We cannot afford to turn our heads away from all of this anymore. So this is only 3 small examples in connection to plastic. There are many more things, but I think at the core of what I'm saying is, because this platform is you know, about money and uh, profit and planet, I just want to leave you all with a statistic, a number that's, I think, very critical. And I really believe that it is counterintuitive for governments, for policymakers, for industries and individuals to not consider this. Nature and its services are responsible for $44 trillion of economic value generation, which is basically half of the global GDP. 70% of the world's poor are dependent on nature for livelihoods. And quite frankly, if we don't have health, we have nothing. वो जान है तो जहान है कहते हैं ना. तो that is not just a muhavra, it's not just a saying, it's a fact. And so far, the world, I feel, has developed or shaped economies from a place of double conscience. You know, I'm okay to kill a few as long as I'm feeding a few million. I think that moral conflict has to shift. We have to change the way we think and the way we operate and we function.
Thanks for sharing those numbers and your thoughts with us, Dia. Amarjeet, the social stock exchange is a pioneering and welcome move by Sebi, which will definitely offer, say, more funding structures for Indian social enterprises and NGOs. There are concerns, however, that the SSE will make it easier for larger NGOs to raise capital and create an elite group, say, of NGOs listed on the SSC. What are your views on this?
I don't agree, so that's not the correct perception. And let me try and explain that. So first of all, we need to see, as per the recommendations of the two expert groups that Sebi had set up for setting up the social stock exchange, which are the entities which will be eligible for listing on the social stock exchange. So there are certain eligibility norms, and let me give you some important ones only in the interest of time.
Sure.
So the first one is that an entity who's engaged in creating social impact, who has a social intent, that should be its primary goal. And we have drawn a list of 15 eligible activities, which are again, going back to SDGs and also the Niti Aayog work. So that is point number one. You have to be an entity which is genuinely having an intent to create impact. Next, let's look at some quantitative numbers. Those who will be eligible to list, especially the non-profits. So there are two criteria. One is, you should have a minimum fundraise of rupees 10 lakhs and minimum annual spend of rupees 50 lakhs in the past financial year. This may seem high if you see from smaller NGO perspective, but let me add, and that's very important, we also have lower thresholds of rupees 5 lakhs for fundraise in a year and 25 lakhs for annual spend in a year. This is a category which will be called aspiring to list on social stock exchange. Now, you may have the aspiration, but you may not be familiar with this, complex financial world in terms of how to list, how to make use of the new platform. So there, we have a very good suggestion. The capacity building fund, there's a proposal to set up a capacity building fund.
Yeah.
The corpus size that has been indicated is 100 crores. So that capacity building fund will assist these entities which are aspiring to list on the social stock exchange. So I think it's the interest of smaller entities has been very much kept in mind while developing our recommendations. Let me also add another important dimension. How do the stock markets work world over? They work on the principle of disclosure, right? So any entity, so when you come, even if you are non-profit, if you are coming to a stock exchange for the purpose of fundraise, so you have to have certain discipline. You will have to be more transparent in terms of what you do. You will have to be more accountable, to the investors who are, or other stakeholders who are invested in you. So I think it offers a great opportunity, to my mind, to various, it's not a question of elite or non-elite, to anybody who's interested in better governance, better transparency, better accountability, to come and list here and create a niche for itself. So it's a unique opportunity. We'll see where we land on this. The project has just gone off the drawing board and, we still have some way to go.
Yeah. In fact, Amarjeet, we set up HelpYourNGO back in 2000, and our objective since then has been to increase transparency in the social sector. Just wanted to add a quick question here. So you were mentioning that one of the eligibility criteria requirements is, the funds raised in the last financial year. So we've submitted our comments, to the technical group's report on the SSC. And that was another suggestion that we've made, that you could probably consider the average of, say, 3 financial years, like in the case of CSR, to, exclude exceptional items. So maybe that's something that Sebi could consider.
Sure, we received your comment, I remember.
Yeah.
So we would look at that.
Great. Also, Amarjeet, in the SSC report, Sebi has highlighted mutual fund funding structures for NGOs like the HDFC Cancer Fund, HelpYourNGO Systematic Giving Plan, and Quantum Smile Facility. Could you also give us a flavor of the innovative structure that Sebi is considering under the SSC?
Yeah, I'm happy to do that. So, before I talk about the innovative financial structures or instruments, let me share with you, just some perspective on where does Sebi fit into all this? I mean, why is Sebi getting into the social sector, so to say?
Right.
So, see, there are two parts to this. One is the Indian securities market, the Indian stock market, as we all know, is very well developed, right? We figure in the top 10 markets of the world. We compare with the best in the world in terms of, the institutional infrastructure, the products, the practices, the regulatory structure, all that we compare very well. So we have, the point I'm trying to make is that we have expertise. As Sebi, I'm saying we have a lot of expertise in this space. On the other hand, you're moving to the need for, funding the SDGs or funding the development goals and so on. You can't just leave it to the government spending and the conventional sources of finance. You need to explore social capital, philanthropic capital, patient capital, whatever you want to call it, and you need tons of it. So the idea, the thinking behind the Social Stock Exchange initiative was that on the one hand, you have a good securities market infrastructure. On the other hand, you have need for developmental funds. Can these two marry? So, can this infrastructure serve the cause of the social sector by facilitating fundraise through stock exchange mechanism? So basically, can we develop some new structures and mechanisms within the securities market, or can we improvise on our existing mechanisms and so on? So these are the questions that we asked the expert group. And the group came up with a variety of recommendations on number of instruments that can be deployed. And just to give you a quick reference, we have social impact bonds and social impact funds, development impact bonds, zero coupon, zero principal bonds. And then we have this donations through mutual fund route. I will not go into these details. One can refer to the report and read all of this. But let me pick one which I personally like a lot, and that is the mutual fund structure. So that's a very simple structure. So the expert group has recommended, mutual fund industry can actually utilize that. And how does it work? So we have two well-known examples. Let me illustrate again with examples. So one is the HDFC, although I should not name any particular fund, but there are not many, so I'm constrained. HDFC Cancer Cure Fund, where the investors can choose to donate the interest income, arising from their investments, either fully or partially. You can just have to sign off, and then the rest of it is taken care, and the funds go to the Indian Cancer Society. Second is the quantum. So quantum mutual fund smile facility, where HelpYourNGO is also involved. And that again enables investors to redeem part of their units for donation to NGOs, which are registered, and I believe some sort of oversight you have through your NGO on them. Mm-hmm. So which again gives me as an investor some comfort that my money is going to the right place. So I think I like the simplicity of this structure. Is very easy to understand, very convenient to operate. When I'm investing in mutual funds, I simply have to sign off on all of this. So I think there's a need for more such funds to come. I just pause there.
Absolutely. I agree with you. I would also like to highlight the difference in the two. So one, obviously, with the systematic giving plan facility that we've started with Quantum via the Smile facility, there is no lock-in period. The principal is not repaid back to the investors. The whole objective is to, donate, say 10% annually over a period of time to nonprofits. And also with Quantum, we've covered 6 different sectors, pan-India. These are nonprofits working pan-India. So it's not, the funds are not focused to say one NGO or one cause. It's spread across different causes and supporting nonprofits working across several SDGs. With this, I would like to quickly give you a brief about our products that Amarjeet touched upon. Let me just share my screen. Hold on. So HelpYourNGO launched 2 products, the Systematic Giving Plan and the YourRedButton, with the aim of building a corpus for NGOs and thereby helping them achieve the SDGs. Now let's discuss why is it important to create a corpus. University endowments and foundations in countries like the UK and the USA invest their corpus for long-term capital appreciation, and typically the capital distributions from them fund 30 to 50% of their annual operating budgets. Here we've taken the example of Harvard University's endowment. Now imagine if NGOs could rely on a similar pool of capital. We built our products to create a steady stream of fund flows for NGOs, thereby enabling them to focus on their work and not waste resources on fundraising. So how can you help? It's simple. Answer this question. Are you a mutual fund investor? If yes, then SGP, the systematic giving plan, is for you. And if no, then YourRedButton is the product for you. Now, what is SGP? SGP is a first of its kind initiative in the world, which enables mutual fund investors to contribute 10% of their investments to vetted NGOs. So in simple terms, like you currently have the growth and dividend units, there will be SGP units, and 10% of only the SGP corpus is donated annually. There is complete flexibility and no lock-in period. So in case the investor suddenly needs the funds parked under SGP, one can simply switch back to the funds in under growth or dividend units. In 2018, Quantum was the first fund house kind enough to allow SGP to be the first pilot with them via the SMILE facility. Moving on to the SGP process, there are 3 easy steps. Step 1, invest in the eligible schemes of the mutual funds. For example, there are 6 schemes for the quantum investors. Step 2, on the payout date, every year, 10% of the SGP corpus is donated to the selected NGOs. And step 3, HelpYourNGO offers end-to-end services. So right from vetting the NGOs and issuing donation receipts to sharing program reports. We did some calculations, and even if just 1% of the current AUM in the equity funds is moved to SGP units, and 10% of it is disbursed to NGOs, that would mean 1,500 crore rupees being disbursed to vetted NGOs every year to further the SDGs. Now that is the potential cascading impact of SGP. While we have partnered with Quantum so far, we are also encouraging other fund houses to adopt SGP, and a push from Sebi for this will definitely help. Now let's understand what YourRedButton is. It is a one-click solution to create a corpus for NGOs. Moving on to the YourRedButton process, just like SGP, there are 3 simple steps. You click on YourRedButton and donate. The funds are invested in SEBI-approved mutual funds. Every year, around 10% of the corpus is disbursed to vetted NGOs, and HelpYourNGO shares the donation receipts and program reports. Now, apart from individuals, even corporates may choose to adopt YourRedButton by simply incorporating the YourRedButton logo on their homepage, which will offer their users and clients an option to support credible NGOs and further the SDGs. So like I mentioned earlier, it is a one-click solution. Now, why is it important to support these products? Firstly, they offer an opportunity to help achieve the SDGs. Both the products are simple plug and launch mechanisms available for adoption to all fund houses and corporates. Everything is customizable. So right from the NGO grantees, percentage contribution, and in fact, even the payout schedule. And we have seamlessly completed 3 payout cycles for both the products and know that the backend mechanisms are working perfectly. We are proud to share that SGP received the award for the Best Social Impact Initiative in 2018. Thank you so much for patiently listening. We've shared links to both our products in the chat box, and a lot of questions have been pouring in for the panelists. So let's quickly move to the last segment of our webinar, the Q&A session. I hope it's okay with all of the panelists if we just extend the webinar by, say, 10 minutes. So we can take 1 or 2 questions per panelist. Great. Chirag, the first question is for you. How has the ESG fund performed so far as compared to the other alternative investment funds managed by you?
So each fund kind of performs as per its own mandate, invests and performs as per its mandate. But if you look at the ESG fund, for example, we launched in July 2019, and it's been a short track record of less than 2 years. But if you were to dissect it, because if you look at the last 2 years, there has been a market cycle of its own, right? Because of COVID, market fell sharply, and then it recovered and rebounded much sharply after that. So in this period, the ESG fund that we offer has done excellently well. And in each of the period, when it fell, markets fell lower, and when it rebounded, in each of the period, it kind of outperformed the traditional market cap indices. It also outperformed the ESG indices overall. So that really tells us that, our process of ESG or vetting companies on sustainability is working well for us. It's a very short track record. Investors should only come into this kind of funds with a very long-term horizon, not looking at just a 2-year track record that we have, but have a 5-7 year view. Let markets run through cycles, and that is where the true benefit of sustainable investing can be reaped. So it is not a short-term product, though the short-term performance is excellent, but have a long-term view when you're coming in sustainable funds. So overall, we see that from a risk perspective, the drawdowns of volatility has been better. Returns have been higher. So overall, on a risk-adjusted performance basis, the fund has done really well.
Great. Thanks, Chirag. Dia, have you been able to influence your friends and family to follow a sustainable lifestyle? Dia, you're on mute.
I hope so. A small example would be when the world was open and we could visit restaurants, my nephews, before the server would bring their drink that they'd ordered, they would say, please make sure that you don't give us plastic straws. And that would be like a moment of triumph. I think more and more young people and families across India are recognizing how important it is to go back to basics, live in better harmony with nature, understand that our consumption patterns have adverse effects on our health and the health of the environment. And, I'm going to use this opportunity to make a request to Amarjeet, because I was listening in very keenly to everything he was saying. And I've often wondered why this hasn't been done before, but I think this is my opportunity. So I'm going to quickly jump in and say it. Amarjeet, I really want Sebi to consider, because we need to build a green recovery from this pandemic, and it is definitely something that is going to define our present and our future in terms of health and prosperity, to make a certain percentage of CSR mandatory for organizations and actions that secure and protect ecosystems, forests, and wildlife. I think a very big part of our green recovery, and because ecosystem restoration is the mandate of this decade and will define everything, we must, as a nation, make this an example. The world leaders today, of course, the Secretary General has been appealing to countries to kind of help developing nations monetarily with contributions, but I feel like we on our own are quite capable of a green recovery, so long as our policies and our government can implement that and enforce it in a way on industry. Please consider this. I think we'd all be very, very grateful if it became a reality. Yes, we could also tax carbon, but that's a separate conversation for another time. But we should definitely consider making a certain fixed component percentage of CSR mandatory for green recovery.
Well, thanks, Dia, for that input. Let me first give the bureaucratic answer, and my apologies for that. So that piece is actually, that is handled by the Ministry of Corporate Affairs, not by Sebi.
Maybe you can propose it to them.
Yeah, definitely. So, but let me also mention, in our new disclosure framework, we have put a lot of emphasis on disclosures relating to climate change. So, air emissions, greenhouse gas emissions, waste management, the whole range of disclosure. In fact, my colleagues were telling me there are about 500 data points now, not just for climate, but others also, all taken together. And these are all very quantitative, measurable, comparable sort of disclosure requirements. So I think this will make a huge difference, but we have to wait and see. But I've taken your point, but as I said, my apologies, this is not strictly within our domain.
But be the man to propose it. We'll
Sure.
be very grateful. Thank you.
Sure.
Amarjeet, in fact, the next question is for you. Will any incentives be offered to investors to encourage them to use the SSE platform?
So, as I mentioned, there are 2 reports on the subject, and the first report has dwelt extensively on incentives. In fact, during the deliberations, it was recognized that if it has to fly, you have to have certain incentives for all stakeholders. So, which will be, investors, donors, and even for the platform itself, and all others who participate in this. So there are certain, proposals for capital gains tax related reliefs or securities transaction tax related reliefs. Also, on the CSR, there is a recommendation that the entities, the NPOs, the NGOs which list on SSC, they should be able to receive, they should be eligible for CSR funding.
Right.
Similarly, the companies which want to contribute to this capacity building fund of 100 crores, which I mentioned earlier, that should qualify as their, as a part of their CSR spend. So there's a range of, incentives which have been proposed, but again, they're not within Sebi's domain. There are different agencies who deal with it, and they'll have to take a call. So it's a lot of collaboration which is required, on these matters.
Absolutely. In fact, I think there was mention of trading of CSR certificates also for overspent CSR funds.
That's right, absolutely.
Yeah. Okay, thanks, Amarjeet. Chirag, back to you. What is the exit policy for the ESG fund? And have you exited any stock because it fails to meet some of the criteria after you've added it to your ESG portfolio?
Yes, if you look at the ESG landscape, it's all evolving, right? If you look at the mandate in terms of information given out by corporates, it's improving. The practices are improving. The accountability is improving. So we are moving towards a better future for sure. But in this, there are a lot of things that will come to light, given the evolving scenario that we have because of COVID or any other business challenges that they may face. There are decisions taken by the companies. And what decisions that they take make us evaluate them further on what kind of practices that they have, what kind of actions they have taken. So all that new information we have to absorb, evaluate, and analyze those companies. So yes, there are companies that we have exited in last 2 years, given that they are more emphasis is on ESG scores. If the company is good on ESG, positive score on ESG, it becomes part of the portfolio. We are true to label, like Amarjeet said, ESG funds have to be true to label. We are very much true to label, and ESG does all the heavy lifting in terms of allocation to stocks. And if the stocks that we evaluate, we kind of do a 6-monthly update on a minimum on each stock. And if there is some new information that has come to light and that's not appropriate ESG behavior and their ESG score falls, we will exit out of those. So we have kind of moved out of a few stocks over the last 2 years, given their scores fell. There is, for example, I'll give you, not naming the company, but there was a company which kind of stopped disclosing a lot of information. They kind of stopped engaging with us. Engaging, we think, is a very essential thing because that is where we can nudge companies to become more better. They cannot be complacent and stay where they are. They have to improve. And if the company doesn't engage, doesn't give us more information or any information that they stop, it becomes difficult for us to evaluate that company. And that is why where we are forced to move out of those companies. So I think, yes, there will be exits. There will be, as new information comes, we will absorb, analyze, and take our portfolio actions as may be necessary.
Thanks, Chirag. There's one question on SGP which I can take. Is there an option to choose the percentage and join particular scheme of mutual funds? So like I was mentioning earlier, so far under SGP, we've only partnered with Quantum Mutual Fund. And for their investors, there is a fixed percentage, a 10% contribution made to 6 different NGOs of your choice annually. Okay, Amarjeet, there's one question for you. Current Sebi norms don't allow crowdfunding of financial lease transactions unless they are through an NBFC, which increases cost of finance for a company. Can Sebi quickly act on this and come up with a regulation?
So if I understand the question right, probably the being asked is why don't we have crowdfunding, right? So there are, there are issues around that, mainly pertaining to investor protection. So this has been considered in the past, and our conclusion was we need to watch out this space, and and perhaps we are not ready. But I mean, I do take it as an input, and we will see.
Thanks, Amarjeet. I know we haven't been able to take all questions, but I'm sorry, we're running short of time. So we'll have to end the Q&A now. I'd like to make a special announcement that HelpYourNGO will be donating 1 lakh rupees to the Wildlife Trust of India. And with this, I'd like to thank our speakers, Dia, Amarjeet, and Chirag, on behalf of HelpYourNGO for sparing time to speak with us today and sharing valuable insights. I thoroughly enjoyed this discussion, and I'm sure all of the attendees did as well. Thank you all for signing up and attending this webinar. Special thanks to Quantum for assisting us in hosting this. And it's been an absolute pleasure being with all of you today. And thank you. Have a great evening.
Thank you.
For having us.
Thank you.
Thank you.
Really nice meeting everyone, and thank you to everybody who joined. Thank you so much.
Thank you.